Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back and welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, it's been a week to be short of stocks. I'm not sure about the currency, but that was the trade that you put on for the portfolio last week, which was a short position on the rand. Let's start there.
Yes, that's right. So we put this trade on last week, and remember I said that this is a trade that I would probably look to exclude from this year's portfolio, and I'm wanting to run it out into next year because a pattern that I've noticed over many of the last 11 or 12 years is that the rand seems to be seasonally quite weak during January. So initiating a short rand position during November, December time seems to have actually paid off relatively well going into January if we look back at history. So if this pattern is to repeat itself, then we'll be on the right side of it. But we're going to push this trade into next year's portfolio. But if we have a look at the chart now that's on the screen, what you can see there is that the rand dollar has been moving up into this large ascending triangle pattern. And you can see the big number of flat tops here at 11 Rand 40, combined with a series of rising bottoms or rising lows here. And that type of pattern does typically resolve itself in the direction of the prevailing trend. And the fact that you've got rising lows here implies that there's actually a propensity for the rand to weaken ultimately through that 11 Rand 40 area. And my sense is that if it does break through 11 Rand 40, that actually could be quite nasty, and it could be quite a violent break weaker if we were to see that. So we've put a trade on last week. We've gone short of the US dollar rand at 10 Rand 99 on the spot price, and we're using a currency future for this, a March 2015 currency future. Now, because I'm effectively buying 4 months worth of time value here, I pay a premium for those futures over the spot price. So the price that I paid on the currency future was 11 Rand 20. So that additional 21 cents there is effectively the time value that I'm paying for 4 months worth of time for holding this trade. My stop loss is going to be 10 Rand 69 on the spot. Now, if you have a look, there's also a smaller little triangle structure busy forming over there within the end of this larger ascending triangle. And you can see there's 1, 2, 3, 4. Now we're starting to probably make the fifth wave here. And strictly speaking, this is a perfect triangle pattern from a textbook perspective. It's looking like it's starting to make the fifth wave. Usually the fifth wave of a triangle is the one that will actually break out. And ideally, you want that triangle breakout to occur approximately 2/3 of the way into the apex of a triangle structure. So in other words, if you took those two dotted lines and you projected them out to get an apex, you would notice that provided we get a breakout relatively soon, we're going to break out around about 2/3 of the way into this triangle structure. And if that is the case and if it works, then that opens up a short-term target of 12 Rand.
Ouch.
But there's also a bigger target of 12.50 based on this much bigger ascending triangle pattern as well. So we'll see if and when it gets there. But my sense is that if we start to push through 11 Rand 40, then it could actually get a bit nasty.
Because, of course, that was a short on the rand, was the trade that kick-started the portfolio this year, wasn't it?
Yes, it was. That's right. And we did a similar thing last year. We actually initiated that trade right at the end of December, and we put it into the 2014 portfolio. And it did work out very well for us. And statistically, when I look back at it, the rand has weakened by an average of 6.5% in the month of January over the last 11 years. So, I would probably say that must be the weakest month of the year for the rand-dollar exchange rate. So if that pattern repeats itself, and combined with this technical pattern that I've outlined here, then I think we're on the right side of this trade going into January. I suppose the only possible risk is that the lower oil price could slightly improve our current account deficit situation, and it could also help to bolster our economy a little bit. Those are the only things I can really think about to be positive on the rand. Other than that, I can find you multiple reasons why we should be bearish on the rand.
Well, I was going to say policies, South African government policies, but also what's happening in places like Russia, and I think maybe a general negativity towards emerging markets in the BRICS countries. I mean, we might just get lumped in.
Yeah.
I mean, the ruble has had its worst year worst day since 1998. So. We wouldn't want to be lumped in together with them, but it could happen.
It sometimes does happen. Unfortunately, these emerging markets can sometimes be quite correlated. So, yes, that is another risk.
Okay, Garth, then let's go and review BHP Billiton, which unfortunately it was frustrating you last week. And I imagine you've taken some pain on it. So how did it all pan out in the end?
Yes, well, unfortunately, it's been stopped out now. And I say unfortunately, but fortunately as well, because what we saw on the market yesterday was some serious devastation in the resources space. And luckily, we were stopped out before that all happened. If we look at the chart of BHP Billiton that's on the screen now, what you'll notice is I'd identified this downtrend that has been in place since August. There was a big support area, 280 Rand, which was evident on the longer term chart. You can't see it on this chart, but I'd seen that it was starting to hold support at 280 Rand, and it was beginning to break out through this downtrend. So I thought, all right, well, that's good. It's holding the long-term support, and it's breaking this near-term downtrend. That's good news. So we went along and we bought 375 CFDs at 284 Rand, and my stop loss here was 270 Rand. And I was looking for a target of 315, which obviously was not met. Now, it's been dribbling away over the last couple of weeks. After initially getting out the gates quite nicely, the trade has gradually been dribbling away. And I suppose there was a warning in that in itself. My best trades generally work out very quickly. And this one has been gradually, working its way lower. Anyhow, it was stopped out on, Friday of last week. So, and I don't use automated stop losses. Remember, I monitor the stop losses manually. So I managed to get out at a price of 265 Rand 57 ultimately, which was my average exit price. It's a little bit below our stop loss of 270 Rand, and that difference is what we call slippage. And unfortunately, when you use a manual stop loss, that's sometimes it's a risk that you face. Anyhow, we got out at 265 Rand. We incurred a loss there after all transaction costs and after financing costs are included. We lost just over 8,000 Rand on this trade. So look, it's not great, but it's not the end of the world either. And certainly, if we look at what happened yesterday, the share traded down as low as 241 Rand intraday. So we could have lost a lot more money on this trade had that stop loss not been executed. So in a case like this, you kind of look at it and you say, oh, well, we lost some money, but actually I feel good about it because we could have lost a hell of a lot more if we had not have executed that stop loss. It's a disappointment, but not a complete disappointment in the end. I think in retrospect, though, what I probably should have rather done in this case is I know the resources sector has been weak, and the financial and industrial space of the market has generally been the place to be playing, and there's a lot more upward momentum there. And perhaps I shouldn't have tried to get cute on a resources share here. I should have rather actually gone into the stocks that I knew had upward momentum on their side. Because
you have preached the mantra of going for the stronger stocks in the stronger sector before, so...
Well,
bad Garth.
Yeah, absolutely, bad Garth. From a high probability trading perspective, that's a good idea. You want to try and get on board stocks that have upward momentum in their favor. And yes, so I think I dropped the ball here in that respect, and I kind of deviated from my proper trading principles that I always try to preach.
Having said that, though, when a trade looks as if it's working out almost immediately, it gives you a certain sense of confidence. So if it comes back a bit, you think, okay, well, now it's just consolidating. And it almost, you give the trade more, credence maybe than you should.
Yeah, I think that's right. And that's certainly the case here. I mean, I looked at this BHP Billiton chart and I saw it moving up and then I saw it consolidating. And I thought, I know what's happening here. It's starting to make the right shoulder of an inverse head and shoulders pattern. And if we start to break above 305 Rand, well, then it's all, off to the races. And unfortunately, that's just not what's happened. Of course, it's gone completely in the opposite direction. So we continue to learn lessons, even once we've been doing this for a while.
No. Well, we've learned lots of lessons this year, Garth, which takes us to the next trade that you still have open. It's the put option structure, which is probably looking quite good at the moment, given the really nasty activity of the last couple of days.
Yes, it is. In fact, this has been a very exciting trade to hold for this quarter. Not always good exciting, sometimes bad exciting, especially when we saw that aggressive sell-off in October. It's a put spread option structure. It's combined of two put options, a long put option with a strike of 45,000 and then some short put options with a strike of 43,350. Now that is the payoff that you see of the put option structure there. And what I did at some point in the past, in this last quarter, was I went along and I actually bought one top 40 futures contract at 45,200 against this structure. And what that implied is that dotted line is the payoff of the futures contract, and then of course the yellow line is the payoff of the options structure. And my feeling was that from 45,000 we then had a V-shaped payoff. If the market went higher, we would make money on the futures position, and if the market goes lower, we would then make money on the options structure. Now, where we're sitting currently is at 45,500.
So that's almost in the sweet spot.
Yeah, it is almost in the sweet spot. Sorry, 44,500. 43,500. I've made a mistake on the slide here.
Okay.
All right, so it's almost in the sweet spot, as you can see there.
Yeah.
43,500 is approximately where we're trading now. What that implies is that we've got a mark-to-market profit running on this thing of 13,000 Rand at the moment. But now remember, I am running this out to the futures closeout, which is on the 18th of December. So anything can still happen between now and then. I'm not looking to close this trade out just yet, unless I can do so at a favorable price. But the one downside of these structures is that they are quite difficult to trade out of.
Which is what we learned this year.
Well, exactly, and we learned that kind of the hard way in October when the market was really getting hammered. But right now, as it stands, we're kind of in the sweet spot with this trade at the moment.
Of course, though, well, we'll get to that in a minute, but you've closed out the portfolio for this year and the donation to charity. So if you do make a gain on this trade, it'll roll over into next year.
Yeah, I think I'll roll the gains over into next year's contract. We're basically closing the portfolio off as at today's values. And any additional profit that gets made on this, I'll push out to next year's portfolio.
Okay. So ahead of that and what the portfolio ultimately looks like, I know you want to focus on the major sectors of the market heading into the end of the year, because this is, of course, the third last show of the year.
It is indeed, yeah. Now, so I just want to have a look at the three major sectors: resources, industrials, and financials, just to lay the land where we stand. Now, so we've got the resources sector over there on the screen at the moment, and you can see that very, very violent sell-off that we've seen over the previous 2 trading days. And what's interesting is that the market has fallen into this lateral support zone at 41,000 on the resources index, and it kind of reversed up quite aggressively off that support level yesterday. What's also extremely interesting to note is that big volume spike that we saw yesterday. Yesterday being Monday. So for my money, I'm going to stick my neck out and I'm going to say that I think yesterday's move was a capitulation, exhaustion sell-off in the resources sector. It has all the hallmarks of an absolute exhaustion bottom. And we did see a number of those resources shares reversing up aggressively off their lows intraday yesterday. And we've got that very big volume spike, which is often accompanied with a capitulation type of sell-off. So for my money, I think the low is now in for the resources sector, certainly for the foreseeable future, and we'll need to see how it now trades from here. But I think that we've seen a capitulation move, and the likelihood that we're going to see those lows of Monday again, I think, are quite remote from here.
What about the industrial and financial industries?
The industrial sector and the financial sector have both been strong sectors of the market, and they remain so. The industrial sector, if you have a look at it, seems to be consolidating in a small range at the moment between 60,000 and 62,500, and we still are within that range for the time being. So I guess we would need to see a break either higher or lower out of this range to then determine the next leg of direction.
And financials, similar picture?
Yeah, financials are quite a similar picture. So we've broken to new all-time highs recently on the financial sector. This is now the FINI 15. And we also range bound at the moment between 15,250 and 15,750. So looking at these charts on a relative basis, you'd still say that the industrials and the financials are the strongest on a relative basis. But I also think that given that we've seen this capitulation move lower in the resources sector, you might just find that the resources right now are so completely bombed out that there's room for a bit of a recovery there. And you might just find that that area of the market starts to attract a little bit of short-term interest, potentially at the expense of the industrials and financials. I don't know. So we're in an interesting space right now in terms of sectors on our market. I'm kind of glad that we're not going to be trading for the next few weeks, because I'm not sure where I'd really want to be putting my money right now in either of these sectors, because there's potential for rotation, but it's, we'll have to see how it plays out.
Tricky.
Yeah.
All right, well, on that note, Garth, you have closed the portfolio, so how much did you end up making?
Well, there we are. So we've got 356,000 Rand in our portfolio now as at the end of the year. So that's up 42.5% for the year to date. We've still got open positions on the rand-dollar currency future, and we've got this option structure which runs out for another 2 weeks. So there's still a little bit of potential for movement here. But by and large, this is how we're cutting off for the end of the year. So we've made 42.5% return in 2014, which is not too bad.
It's not too shabby. Last year it was 52%, so unfortunately you haven't managed to better that, but still a fantastic performance.
Yeah, no, I'm very happy with that, and we've beaten the all-share index by a hell of a long way.
That's your relative benchmarks, always important. Garth, we'll leave it there, and next week we'll be detailing the charities that we'll be giving this money to, but thanks as always for joining us on the show. That's Garth Mackenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.